Here's the Elliott wave forecast for April 3rd, 2014. I'm going to be doing the 5 to 7 year chart of the S&P Dow and NASDAQ in this forecast. The reason why I'm doing it is because I want to show people how stupid they are for not seeing that this is a third wave. And if you don't see this is a third wave and you're calling for a crash, and apparently I heard that the short interest is at a high that was reached in August of 2011, which, as you guys know, August of 2011 was the low of the crash of the Greek crisis, the European crisis way back in 2011. The short interest is matching, from what I heard from my subscribers, that the short interest is literally matching that of August 2011 when we're in the middle of a fucking third wave. Basically, you cannot argue that this is going to all of a sudden reverse an S&P down to like 600 in S&P, just out of nowhere, all of a sudden go boom down to 600. You're completely psychotic if you think that right now. And Robert Prechter basically today, from what I heard, this is what I heard. Like 2 months ago, he went short, triple leverage short, and the stop was 1890. There was like maybe a month or two, whatever time frame it was. He basically told people again for like the 18th time, whatever, the past 5-6 years, that he told them that the market was going to crash and put a stop just in case at 1890. Well, guess what we closed at today? 1890. So look at this chart. I mean, how can you see a crash coming out of this chart? This is a freaking third wave. The slope of it, the beauty of it, everything about it is just the most beautiful pattern I've seen, like on a long-term chart. And we have not seen something like this since the early 80s and the late 90s. This is a clear-cut third wave. 1, 2, 3. So wave 1, wave 2, wave 3. First wave, 666 to 1357. Wave 2 to 1070, and then the third wave. And minimum target is 1.618, would be 2251. Highest target would be 3570 if it's a pure third wave. And typically the third waves are usually 1.618 times the percentage gain of the first wave. In this case, 3570 in the S&P. For the Dow, I mean, honestly, how can you guys call a crash out of this formation? It's like impossible. It's like literally there's no way we're going to drop from 16,000 in the Dow down to 6,000 in like 1 year, or just randomly out of nowhere just crash. You have to be completely psychotic to see that. Either blind or psychotic. This formation is beautiful. Like wave 1, wave 2, wave 3 of the Dow. My first target was around 18,000, which is closing in on right now. And the highest target I have is actually around 33,000. It was a 1.618 times the percentage gain of the first wave. So 1, 2, 3 would be either 18,000 or as high as, actually, wait, excuse me, it's either 21,000 or 33,000 in the Dow. And this is clearly, if you think at this late in the game, you think this is not a third wave, you still think it's a C wave, you're either crazy, psychotic, or a liar. And just choose one. You just choose either one of them. But if you can't see that this is a third wave, then you're either crazy, stupid, a liar, or blind. For NASDAQ, this is incredible. This is an incredible move. Look at this beautiful, elegant chart. 1, 2, 3 off the lows of 1287 in the NASDAQ. 1, 2, 3 would take it to as high as, I believe my target was 4,800 for starters. The highest target would be around 6,000. It was 1.618 times the percentage gain of the first wave. So what I'm saying right now is, do not expect a crash of magnitude. Do not expect the Dow to all of a sudden drop down to 6,000 or S&P 600, because you have to be either crazy or psychotic to see that wave pattern in that chart. That's a wrap.